Welcome. I am All in Danger. I am your technical trader. Today I will be sharing with you my favorite trade strategy. It is the combination setup. This combination setup is different patterns put together in the right way in order for you to get higher profits at less risk. If that sounds exciting to you, please stick around to learn this strategy.
Let's look at some rules. The combination trade. What is it? It's a combination of three elements. First off, we have the elevated RVol, also known as elevated relative volume, plus the big pattern break, plus a small pattern risk setup. All these combined will give us an A+ trading setup. So this trading setup uses different trade patterns that we will be looking for. I have chosen 4 very simple patterns for this example. You can obviously use more than this, but this is the easiest one to learn and use in this trading setup. We have the bull flags, the bear flags, the bull pennants, and the bear pennants. I like to call the bear pennants or the bull pennants for triangles. The reason why these work so well is because we have different people from different backgrounds that study charts, but all of them somehow know these patterns, the triangles, the bull flags, the bear flags. Now, for us to be able to profit from this, the trick with this trading strategy is that we need to figure out what patterns there will be the biggest or the largest amount of people using at any specific time, right? So that you can be on the right side when the masses flock to you. Different people will be using different time frames when looking at the exact same patterns. So you might have one group that look for the long-term perspective, another group looking for a medium-term perspective, and a last group looking for a short-term perspective, right? The trick with this trade is when we can find all of these people agreeing that now is the time to buy, right? You want to see all these people have their signals to buy or sell, and you want to get in before these people do, and then profit from it. This might seem complicated and hard, but I assure you that it's not. By using my strategy, I will now show you with a real-life example how you can do that too. Okay, let's take a look at Tesla. This actually happened just a few days ago. Now, the first criteria is regarding the volume. Now that you can see we had a spike up. So we had been ranging in this lower area volume-wise, and now finally we had a big spike. It is significantly larger than all the other volume bars that have been in this area. So it is elevated RVol. Second criteria is a big pattern. Like you can see here, we have had this downtrend going on for a while, and now we have finally broken past it barely. We're actually fighting on top of it. We also have a smaller big pattern that we broke out of to the upside. So we have 2 pattern breakouts at the same time, which makes it an even stronger break, right? Third criteria happens when we zoom in all the way into the 5 minutes, and you can see that we are ranging on top of these breakouts. Not only are we ranging, but we're actually forming a flat top flag. How do we play flat top flags? We only enter a position if the very top breaks, and our stop loss should always be the last strong support in the flag, right? Our targets, if this breaks to the upside, should be the next resistance. How do we find the next resistance? I like to zoom out to the 1 hour, and you can see here that we have a lot of messy areas. You can see these wicks at the top, which I consider to being resistances, right? There's even a small gap fill up here. So here, or even up here, we have resistance there, and we have one here. The reason why I look at these resistances compared to the ones that are all the way up top is because we also have this up sloping trend line, the blue one that you can see here in the middle of the screen, this one going across. If we were to hit that, that would also be considered a really strong resistance. Those are our targets. Let's see if this flag can break. Targets, let's move it up. Here, as of now, you can see that we have a 7-to-1 risk to reward on this trade. You can see that we came back and touched this trend line, meaning that that is also a strong support. So if this breakout were to occur, we can move our stop loss up to this last support. Okay? This now, if this were to break out, gives us almost a 10-to-1 risk to reward. It broke out, we have entered. Let's see. Kind of a slow start. Oh, big red candle. We did not get stopped out though, like you can see here. We went close, but did not get stopped out. Keep holding it, keep holding it. And boom. Huge break to the upside. Normally it does not stop before it hits the closest resistance. Sometimes it can be smart to take your profits when you are this much in the money. So normally I would take half of my money here and then hold the rest with the stop where it is. That way I'm guaranteed to make money at this point. And we hit my target where I would go out. In this case, I think I remember it continuing to go on up, but a 10-to-1 risk to reward is more than good enough for me to take my money at these targets. Let's do a quick summary. Now, what did we learn? This is my combination trade or combination setup. It happens when we have elevated RVol or elevated volume, like increased relative volume, combined with a big pattern breakout, like it did in Tesla. Remember, we had two strong breakouts, combined with a really small risk to reward pattern setup. Now, all these three things combined together creates an A+ setup because we managed to get a 10-to-1 risk to reward on our trade. That is not a lot of risk with a lot of reward. If you like this content and like my trade setups and would like to learn more of them, please like and subscribe to my channel.